All right, another company that we're talking about here this morning, Philips shares plunging. The medical device company cut its full-year sales target after weak demand from China weighing on its third quarter. To discuss, we've got Roy Jakobs, who is the Philips CEO. Plus, we've got Yahoo Finance's very own Anjalee Khemlani. Great to have you here with us. So first, Roy, you got to just take us into this quarter and really the challenges that you're seeing right now. Is there any abatement in sight for some of those overseas and Asia-Pacific challenges that you were citing?
Yeah, so when we look at the third quarter results, we saw two parts. One, we saw strong margin delivery. So we stepped up 160 basis points in margin, despite that we had flat sales growth. And that flat sales growth indeed was driven out of further deterioration in China, where actually we saw two underlying trends unfolding. One was the consumer market, where further drop in consumer sentiment led to further sell-out drop and sell-in drop. So actually weak consumer market. But also we had the hospital market, where actually we expected the stabilization of demand, and that also further deteriorated. So you see that a slower macroeconomic environment in China continues to have an impact, and that we had to reflect into our full year sales outlook, despite the fact that we see actually growth in other parts of the world really picking up. And in particular, in North America, we see a very strong order flow. We see a very, very strong sales momentum as the underlying demand in hospitals is growing for innovations, because they don't have the staff to deal with the current demand, radiology, pathology, but also interventional suites. So we see a mixed picture in the world from growth perspective. So we focus very much on what we can control, which is driving margin expansion, as well as delivering on the cash for the full year.
Roy, Anjalee here, really good to see you again. Talk to me about why China is weighing so heavily, considering exactly what you talked about. We know that from the insurance earnings, we've seen that increase in utilization, and that's translating, of course, into business for you. So how do you compare the two buckets when you think about the increase in the US and how long you think that's going to be maintained, because we know it's pent up pandemic demand, versus the amount of business that you do in China and why it's so important?
Yeah, so if you look to China, to start there, you see that on average sales for Philips, it's 10%. But we have two segments that are having disproportionate more impact. It's the consumer segment, where we saw a significant drop-off, where actually it's more significant than the 10%, and also the D&T segment, so the diagnosis and the treatment segment, which actually has a bigger share of total Philips sales in China. Now, that has been really affected. Now, we think that actually China will come back. The question is not if, but it's when. And currently, the visibility is just very low, and that we had to reflect back in our forecast, also moving forward to the full year. At the same time, we think that the improvement in the North American market is a structural improvement. If I compare 3 consecutive years, we had 22, where we had significant still COVID impact. We had a lot of hospitals with negative numbers. 23, we saw many coming into the positive. 24, we see the financial bench strength really strong, and we see that they have waitlists in patients. So the number of procedures are still growing. The number of patients needing an image is growing, and unfortunately, the wait lists are long. So actually, we still see significant strengthening of that demand in North America. And on top of that, also on the consumer side, actually, we have seen North America gaining momentum. So North America is strong, China is weak, but also we see some other pockets of growth in the world. I was 3 weeks ago in Indonesia, 280 million people in very strong need also of healthcare. They have a lot of shortage of doctors, so innovation and technology needs to come in to help them to become more effective and efficient. So we were discussing that with the biggest private hospital chain in Indonesia. We also see in Latin America, actually, that momentum is coming back. So you see different growth speeds in the world, and you need to be agile to address and tap into that. And you just saw that the China impact currently is significant, and therefore you cannot react to it in a quarter. But if you look to the longer perspective, we see growth momentum outside of China picking up, and at a certain point, China will come back.
Got it. And talk to me about AI really quickly, because I know I just came back from a conference where it was the talk of the town. We know that it's picking up in healthcare use. It has been a big part of imaging for a while. Where are you seeing the greatest demand for innovative AI in medical devices?
So I think you can say in general, if I talk to the staff shortage, that where you have nurses short, technicians short, and doctors short, we need to look at how we can support them in their daily work. It starts with routines. When they are doing reporting, how can we automate the reporting? When they're doing a diagnosis, how can we actually speed up the diagnosis? We have a smart speed algorithm that actually is increasing the speed of an image by 3 times. I just came out of Japan. We see 25% penetration of that algorithm on all the MRs that are in Japan from Philips. That's a significant uptake in a very short amount of time because it just doubles the productivity of that MR in the market. We see another need for pathology. You see that actually there are not a lot of pathologists in the world. So actually we have a digital pathology solution that really scans and then actually helps with the interpretation and the diagnosis. So indeed, as you say, there are many practical kind of applications here and now that we can apply in areas of shortage or where healthcare is in crisis.
Just quickly, do you see that application of artificial intelligence or additional technology replacing or just being in annexation or in tangent to existing roles within the healthcare space?
No, it's really supporting, because the problem in healthcare is that we have significant shortages of people. So actually, we cannot get enough people to step into the practice. We have seen people stepping out after COVID. We've seen burnout rates, and we see the queues in healthcare kind of becoming bigger. So actually, we are supporting the doctors with better tools to do diagnosis faster, to do minimally invasive therapies, or actually to monitor patients in a more predictive manner. We're helping the technicians to actually go through their technical workflow in a faster manner. And we're helping the nurses so that actually we can expand, for example, the ratio of how many patients they can watch after in an ICU from 1 to 7 by the use of a tele-ICU application. So distinct needs areas where actually this is enhancing the staff currently, not replacing them.
Roy Jakobs, who is the Philips CEO. Great to have you here with us, Roy, alongside our own Anjalee Khemlani. Thank you so much.
Thank you so much. Have a good day.